TransUnion projects 2012 auto delinquencies to be virtually the same as 2011. 60-day auto loan delinquencies, the ratio of borrowers that are 60 days or more past due, is expected to decrease in the first 2 quarters of 2012 before rising back to 0.51% at the end of the year. The 2012 year-end forecast of 0.51% is dramatically lower, just over 40%, since peaking during the recession at 0.86% in the fourth quarter of 2008. Since 2008, auto delinquency has dropped on a year-over-year basis. It was 0.81% at the end of 2009, 0.59% at the end of 2010, and now TransUnion projects a 0.51% level for the end of 2011 and 2012. Stability and predictability is reflected in our 2012 forecast, which will follow the historical pattern of decreasing slightly in the first and second quarter and rising back to the 0.51% by year's end. 21 states are expected to have delinquencies decrease, while 29 states experience increases. 6 out of the top 8 bellwether auto states will experience decreases. However, most will see auto delinquency remain above the national forecast of 0.51%. The states with the best improvement are Michigan, Rhode Island, and North Carolina, while the top states expected to finish with higher delinquencies include North Dakota, Alaska, and Iowa. The states expected to finish with higher delinquencies are well below the national forecast of 0.51%. The auto delinquency rate itself is performing very well because of the underlying auto loans were made to high credit quality consumers. It's nearly 40% lower than at the peak. There are many reasons why auto delinquency continues to improve and is forecasted to remain virtually unchanged in 2012. Originations or auto loans created since the recession are performing very well. Lenders and dealers have done a great job in matching the best vehicle with the best financing terms for consumers, resulting in lower delinquency. Auto sales have increased and are forecasted to continue to grow over the next several years. The related auto financing or origination volume has also increased, putting downward pressure on the ratio of auto loans 60 days or more past due. Quarterly origination volume is up nearly 41% since it bottomed out in the fourth quarter of 2008. Increasing credit availability, auto sales, and general improvement in the economy are contributing factors. Our forecast is based on various economic assumptions, such as unemployment rates, consumer sentiment, disposable income, and interest rates. The forecast changes as the economy deviates from a conservative economic forecast, or if there are unanticipated shocks to the economy affecting the current gradual recovery. Besides the macroeconomic factors, there are cyclical factors such as competition, pent-up demand, and buying patterns that could impact the auto finance space going into 2012 and beyond. So, let's summarize going into 2012. What can auto lenders and auto dealers expect? Stable delinquency rates with many regions experiencing improvement. Increasing originations, probably not at the double-digit rates of 2010 and 2011, but still increasing. More competitive pressures as new lenders are attracted to the prospect of growth in auto sales. And all in all, 2012 should shape up to be another good year for lenders, dealers, and consumers buying, selling, and/or financing vehicles.